Coming up next is an incredible fireside conversation with Omobola Johnson, Senior Partner of TLCom Capital and former Minister of Information Technology of Nigeria. The conversation will be moderated by Aramide Abe. Aramide is a Nigerian founder and CEO of Niger Startups, a platform committed to building the startup ecosystem in Nigeria. Aramide is also a board member on the board of advisors of Inotide, a nonprofit that is catalyzing off-grid renewable energy solutions on the continent. Give it up for Aramide.
Hi, everyone. Thank you, Fola, for that introduction. And today's fireside chat, I'm going to be introducing our speaker who will be coming up shortly, and I'll just read out her profile. Omobola Johnson is Senior Partner at TLCom Capital LLP. She's currently on the board of Andela and Kobo 360. Omobola also serves as on the board of a number of leading Nigerian and multinational corporations and is a member of the board of the World Wide Web Foundation and the founding chairperson and trustee Women in Management and Business, WIMBIZ. Prior to joining TLCom, Omobola was Minister of Communication Technology, Nigeria from 2011 to 2015, focusing on the launch and execution of the National Broadband Plan and the support of the Nigerian technology industry, including pioneering involvement of the government in a local VC fund and a network of startup incubators. Prior to serving in the Nigerian government, she gained over 25 years of consulting experience with Accenture, including 5 years as country managing director, working with companies in a variety of industries, transforming them into more competitive and dynamic organizations. Omobola has a bachelor's in electrical and electronic engineering from the University of Manchester, a master's in digital electronics from King's College London, and a doctorate in business administration from the School of Management of Cranfield University. I would now like to introduce our keynote speaker, Ms. Dr. Omobola Johnson.
Good morning, good evening, wherever you are in the world, and thank you very much for that. It really is a pleasure to be here, and many thanks to the organizers for asking me to give the keynote for day 2. Thank you so much, and I do apologize for that. You see, I'd had to change locations, and this is one of the challenges of tech in Africa. We're still not quite there yet, but let me just try and back up and maybe start where I stopped. I was really talking about the fact that Africa's growth has slowed. It was slow, and it slowed because, again, of the pandemic, like many other countries or continents across the world. But there's one thing that is actually still growing fast, and that is tech and ICTs. And so, the opportunity for growth and innovation in Africa really will be around the whole tech sector. Typically, when you talk about tech, you really talk about tech and innovation in one breath. And so it's great that we're talking about innovation and growth. I want to add one more thing to it, and which is capital. Before I start talking about capital, I just as I was preparing for this keynote, I actually looked up innovation and innovation indices across the world. There's one particular one which is published every year by the World Intellectual Property Organization, WIPO, and that basically looks at innovation across the 131 countries. Looking at indicators like education, research institutes, market sophistication, and all those things to really rank 131 countries around how good they are at innovation. And of course, when you look at African economies or African countries, they tend to perform quite poorly on these innovation indices, and this is not new. Ghana is 109 out of 131 countries. Kenya is 86, Nigeria 117 out of 131 countries, Mali 112, South Africa 60. I could go on. Literally, African economies, African countries tend to be at the bottom of the pile when you talk about innovation. But yet, in spite of this, we see in the world of technology venture capital, we see a 10x growth in the amount of capital that is coming into Africa over the last 5 years. So in 2015, it was about $200 million. 2020, it was roughly $2 billion. And from the last report that I saw in the Q1 of 2021, we have got up to about $800 million in tech VC. So this is all quite, it doesn't quite fit. If they say we're really poor at innovation, and yet we're seeing a lot of capital coming in to fuel the innovation in tech startup companies, something is going on here. And there's a reason for this sort of, these counterintuitive results that, that I've just put out to you now. And that's because when you look at Africa, from a, just a consumer simple lens, Africa is a continent that presents to us a large, young, underserved consumer market, just over 1 billion people. Most of the billion people are under the age of 35. So it's young, it's underserved in many, many areas, financial services, education, health, you name it. But it is becoming increasingly digitally demanding. And you can see that in the growth of broadband technology, broadband infrastructure penetration across Africa. But even with that, it's still a continent with limited spending capacity. So that's when you look at it from just a general point of view. Even when you look at it from the business point of view, most businesses in Africa are small and the markets are quite fragmented. But when you look at Africa, not from these lenses, but from a technology lens, it makes what looks like a seemingly unattractive market actually makes it look quite attractive. Because what technology does is that, number one, it brings access and efficiency and affordability to large underserved markets. The second thing that it does is that tech-enabled business models actually allow countries, they bring aggregation to fragmented markets, and they facilitate scaling and the scaling of products and scaling of distribution. So when you look at Africa with the technology lens, given the increase of broadband penetration, the fact that the population is much more digitally demanding and digitally savvy, Africa then begins to present some very interesting opportunities and very attractive opportunities for the tech market. So we in TLCom have been investing since 1999 in Europe and in Israel. But since 2017, we raised our Africa Focus Fund, and we started deploying this capital to African countries. And we've seen, while our portfolio of 11 tech startups now is not a proxy for all the innovation that is going on across Africa, it is an indication. I'm so sorry about this. I don't know what's happening. My connection is typically quite good at home, but I do apologize. So I was talking about how 11 portfolio companies that we have is not a proxy for all the innovation that's going on across Africa in tech, but it is a validation that innovation is going on. It is a validation of the reasons why Africa is being seen as an attractive market for innovation, and also capital that actually follows that innovation, as we've seen. And let me just quickly illustrate that by just describing two of the companies that we've invested in. First of all, to explain or to illustrate how technology brings access and efficiency and affordability to large underserved markets. And I want to talk a little bit about one of our companies, which is Pula. Pula is it's an agri-tech or a fintech, really, because it's agri-insurance. It's an agri-insurance company that basically provides insurance to small-scale farmers. Small-scale farmers, for those of you that know Africa fairly well, farming 1 to 3 hectares of land, mostly subsistence farming. They're poor, they're vulnerable, and in a sense they're underserved, and to a certain extent they're also neglected. What Pula has done is to use technology to not only aggregate farmers in ecological zones, ecological agricultural zones, which are basically zones that have similar soil, similar weather patterns, and similar crops are planted in those farms. And it then uses the Pula insurance engine with artificial intelligence, basically to do actual calculations, and come up with a reasonable premium that can be paid by a small-scale farmer to ensure either post-harvest loss or pre-harvest loss. These insurance premiums are less than $5 per harvest season, and a harvest season is 3 to 6 months, depending on what crop you're planting. And so this is less than $1 a month, quite affordable even for the poor farmers on the continent. But the beauty of what Pula does is basically that it actually can package this insurance for governments and NGOs who subsidize this insurance, so the farmer doesn't even have to pay at all. So farmers are insured. If there's a post-harvest loss, they can claim and get money from the insurance company. If there's a pre-harvest loss, they can claim and be able to plant their seed. So Pula has been able to insure close to 5 million farmers across 6 African countries. And this is not about just insuring those farmers. It's bringing a neglected consumer sector into the mainstream that will then allow other companies to provide services to them. So this is really, again, about access and affordability. The second company I want to talk about, and quickly, because I know that we have lost a bit of time, is Kobo 360, which is one of those companies that is using technology-enabled business models to help companies to scale, the smallest companies in fragmented markets that we see to scale. Long-haul logistics across Africa is fragmented. some of the largest companies in sub-Saharan Africa have less than 100 trucks on in their fleets. Many of them are sort of one company and 3 or 4 trucks. And if you compare that to the demand, where one company may need up to 500-600 trucks a day, clearly this fragmented market makes it very inefficient for these companies to get the number of trucks they need. And what Kobo has done is like an Uber platform for trucks. They've created a platform where they can match demand and supply, and also provide some kind of market pricing transparency in this particular market. And so you can just see what technology is doing and why we're seeing this attractiveness in the capital that's coming to Africa, despite the fact that when we're measured on the normal, traditional indicators of innovation, we don't seem to be doing that well. But I want to end by just talking about the fact, because I know time is really far gone now, I want to end by talking about the fact that I can talk about these companies, Pula, Kobo, all of them doing really well, making great impact, doing things that we've tried for many years to do in Africa, but doing them because they have technology and they're leveraging technology very well. But this doesn't come without its challenges. I want to just touch on a couple of those challenges. Now, I mean, the first challenge is infrastructure. I mean, as you've seen right now, I've had to change my internet connection 3 times to be able to have a decent connection. So that infrastructure is still, it's getting better, it's getting more ubiquitous, but it needs to be much stronger, much faster, much more reliable across the continent to really drive this technology growth and the innovation that we're seeing, because the innovation is really on mobile phones and on mobile first. The second thing that we need to look to in terms of things that are constraining these challenges around innovation is a regulatory and policy environment. We're at a point where sometimes innovation is ahead of regulation, and sometimes the regulation constrains that innovation or constrains the growth of companies that are innovating quite proactively and quite well in Africa. And so there's a need, I say this every time that I speak anywhere, there's a need for more collaboration between the regulators and the innovators. Innovators need to understand that when they're in a regulated space, they're in a regulated space. So they need to understand what the regulations are and work with governments and work with regulators. Regulators also need to understand that this is not business as usual. They cannot constrain the growth of companies that are solving some of the biggest challenges we have in Africa by regulation that is not forward-looking, that is backward-looking, and really just constrained. So the trick to this, and I can say this because I was once a policymaker, is just that constant collaboration between industry and the policymakers in the continent. This needs to happen in a much broader and a much deeper manner. The final thing I want to talk about is talent. This is all very new to us. We are building new. We're building new companies. We're building new companies using fairly stable technologies, but there's a lot of talent there's a big talent gap in the country, as in the continent. Software engineers, digital marketing, all these kind of things that we have never done before. There are talent gaps there. We're sourcing them from other parts of the world, but we need to get to a point where we can, because we have a lot of young people in this continent, we need to get to a point where we can actually source the talent that we need for this technology innovation growth, really using local talent. So I think that if we solve these challenges, I know that I've rushed to this and I do apologize for that. If we solve these challenges, I think that instead of talking about $2 billion that is coming to full innovation, we can be talking about $20 billion or more than that is coming to full the innovation that we're seeing in Africa, despite the fact that Africa is not seen as an innovative continent. But technology is affording us opportunities to really begin to innovate in a much more impactful manner and in a much more scalable manner. Thanks very much.
Thank you for that, Dr. Johnson. That was very insightful. I was going to ask, do you mind please repeating the stats that you mentioned regarding population growth? Well, I think your connection was unstable at the time.
Oh, yes, sure. What I said was that Africa, 2019 growth in Africa, GDP growth was about 3.7%. Contracted by 2.3% in 2020 because primarily the pandemic. When you compare that to our population growth of more than 3% in almost every single African country, it means that if we're growing at 1% or 2%, we're more or less standing still. So the point I was making was that we need to think more creatively about innovating that will actually drive the growth of the different countries in the continent.
Great, thank you for that. And you're right, it's so key in terms of looking at the clear opportunities that will drive growth in this landscape. But before we go into innovation questions, I'd like to ask you more about your story, your journey from technology into venture capital. Do you mind sharing some of that with us?
Yeah, so my journey I've kind of always been in tech, so like as you read in my my profile, I studied engineering. It was an Accenture for 25 years, working in systems integration. I once was a software developer. I wrote code, and then moved into sort of program management and transformation projects. After that, I left. I retired. I took an early retirement from Accenture to do different things, including my doctorate. And it was while I was in that early retirement doing some work for Africa Capital Alliance around. They were going to acquire a bank in Nigeria. I got the tap on the shoulder from the presidency to come and be the Minister of Communication Technology. And this was the first time Nigeria was actually having a Comtech ministry. So I did that for 4 years. And that was really where my interest in technology, innovation, technology and technology investments and startups, that's really where that interest was peaked. And I was fortunate so while I was in government, we spent a lot of time doing policies around broadband penetration. We spent quite a bit of time working with technology entrepreneurs and building out a network of incubators across the country. And then, after I left government, I met Maurizio Cao, who is the managing partner of TLCom Capital while I was in government. And, after I left government, he asked me to join them. And it was a no-brainer because this is really what I really wanted to spend the rest of my career on.
Very interesting. And we actually had Maurizio on a panel yesterday.
Yes.
So I'm going to reference something that he said shortly. But okay, I'd like to go into what you've spoken about in terms of innovation and what fuels innovation. And like you said, there's factors that slow down innovation as well. You mentioned some of the challenges being infrastructure. You mentioned regulatory and policy environment, and then that's collaboration between innovators and regulators, and then talent. So out of these challenges and from your public sector experience, which would seem like, I don't want to use this term, but I have to, the lowest hanging fruit or more straightforward to tackle as an African nation?
I think the lowest hanging fruit is around the regulation and the policy environment, because these are things that we can do very quickly. Like talent, which takes time to build. The regulation and policy environment, we can really address those quite quickly because it's all about engagement and collaboration. Engagement doesn't take anything from anybody. Sitting down with the innovators, the regulators, sitting down with the innovators, understanding where the bottlenecks are, understanding where the constraints are, and really solving that problem. And I'll just give a quick example. In Nigeria, a couple of months ago, the Securities and Exchange Commission actually discovered that there were lots of fintechs that were allowing Nigerians to buy offshore securities in exchanges other than in Nigeria. Clearly, they were doing this through licensed securities firms, and they really couldn't do this because they weren't licensed. And so what they did was not so much to ban them and stop them from doing that. They created a different kind of license for these digital fintech securities companies to be able to trade and work with the sort of more traditional ones. So that's the kind of regulation that we need, not banning things or stopping them from happening, but ensuring that they do happen, but they happen in a way that ensures that the regulators can still keep a track of what's going on and ensure that there's a competitive and a level playing field for all the participants in the sector.
Thank you. It sounds like it's an ongoing relationship thing where, everyone has that visibility and insight, and there's constant communication, especially as technology is ever evolving. So regulation, like you said, is absolutely correct. I was going to ask about investment. You mentioned that there has been a 10x growth in the amount of funding that has come into Africa over the last few years, and Africa has changed in the eyes of investors, and we've seen that rapid growth in foreign direct investment. And on yesterday's panel, the entrepreneurship panel, I actually had a partner Maurizio on, and he spoke about the need to explore, at least for entrepreneurs, to explore other verticals, not just fintech. And you mentioned you mentioned agri-insurance, you've mentioned, logistics and platforms such as that you've invested in. So it sounds like investors are more open to industries outside of fintech, if I'm correct. Is this as a result of the pandemic, or, is this just, how the market looks?
Yeah. I think, look, the narrative around fintech is very strong. It's a very, very unserved market. The early successes of VC have really been around fintech with Interswitch and Flutterwave and Paystack and all of that and Chippercash. And so it's natural that everybody thinks about fintech. But I think the point that I would make, and I think the point that Maurizio is making, is that beyond fintech, and fintech is really about payments, it's about lending, but we need to create what I would call content on the internet, and that is if you can pay, what are you paying for? Companies that allow, or startups that allow you to pay for a car, startups that allow you to pay for insurance. So I think that's important to really complete this whole ecosystem of how technology can enable innovation and enable the growth of the continent. So for sure, fintech is great, but we need just to show there are many opportunities that are not fintech. Health is big, because again, it's an underserved market where people are spending, most of the health spending in Africa is out of pocket. And so we need to make sure that health is affordable and the access is also good. So there are many opportunities beyond fintech for investors to think about.
Great, and that's encouraging actually for entrepreneurs and people on this panel who are looking into Africa, looking, at what kind of businesses to start and just eyeballing and planning. So thank you for that insight. Some might say that our region, being Africa, isn't saddled with the kind of legacy systems that can hamper growth and maybe through agility can then help leapfrog other more established markets. If this is the case, might we see a growth in the performance of VC-backed firms that focus on tech and innovation?
We will, but not because we don't have legacy systems. And that's true. We don't have legacy systems, and so we can leapfrog. But we have a lot of other challenges, like I just mentioned. We have infrastructure challenges, we have talent challenges, we have the network of support for founders, because it can be a very lonely journey. That's just being built now. And so, while we don't have the legacy, I don't think it's going to be an easy ride. I don't think it's going to be an easy ride at all. I think there's going to be a lot of hard work to raise the capital, a lot of hard work to deploy the capital, a lot of hard work to get the companies to scale, given the capital that they have been given. So I think there's a lot of hard work that is ahead of us. But the good thing is that we're seeing some of the benefits, the low-hanging fruit, the green shoots of that hard work by the increasing sizes of the rounds that companies are raising, the fact that we've seen some exit in the continent, that is very cheering and very good news. The fact that the deal flow is getting better and deeper and richer, that's fantastic. Today we see about 300 companies every single quarter, and that's fantastic. It wasn't like that 5 years ago. So legacy is not there, but there's still, I don't want to give the sense that it's going to be an easy ride. It's not going to be an easy ride. Lots of hard work by a lot of people to make this work.
Yeah, thank you for that. I think you mentioned talent. And I think about talent and job creation. And when we talk about innovation, and with the advent of technology, AI, IoT, we'll find that perhaps many roles will become obsolete, just generally and globally. And knowing where we are now in Africa, how can we begin to harness more out of what we have for growth to be able to compete on a global scale, just as businesses? I mean, we can see a lot in the areas of, I suppose, payments and fintech and all, but how about other industries in general?
Yeah, I mean, you're absolutely right. I mean, some jobs will go because they'll be replaced by technology, but as those jobs go, new jobs are created. And so, I think for the continent or countries within the continent, we need to be much more deliberate about how we think about the jobs of the future. I always give examples of, there's software engineering, there's a dearth or undersupply of software engineers across the world. And Dell is building a great business. Their byline is brilliance to evenly distributed, opportunity is not. They're building a great business, training software engineers to world-class quality in the continent and deploying them to companies in the US. We need to think about things like data analysts, data engineers. I mean, there's so many new jobs that are being created because of what is happening in the continent that we need to think very deliberately of how we're going to actually make sure that people are being directed to, they're aware of these kind of new jobs that are being created. Beyond that, there's these highly skilled jobs. The other thing I say is that the infrastructure that's been built right now, it may sound funny, but somebody's got to lay the fiber, somebody's got to connect the radios on the base stations. These are jobs that are not as highly skilled, but they are still required to build this digital economy and to help these tech startups, succeed. So it's a real spectrum of jobs that can be created, and it's really just thinking through very deliberately how we fill the gap with local talent to fill those vacancies that are in the continent today.
So again, there will still be jobs. Yeah, things are changing, but it's not like everything is going to go away. Some jobs will even come up and may not be available in other established markets, which makes absolute sense. Okay, I'm going to shift a little bit and speak about women in innovation and in areas of raising capital. So globally, less than 5% of venture capital went to female-led startups as of, I think, 2019. And I think that number is significantly lower for Africa, less than 1%. And the pandemic has further hit female-led firms. That being said, we've seen hundreds of mentorship programs for women in business and in Africa. How can we change this underfunded yet over-mentored paradigm?
Underfunded and over-mentored. I like that. Yeah, I mean, you're right. Those statistics are actually quite depressing. It's across businesses, but it's actually worse in the world of tech VC and the world of innovation. I think that there is a couple of things, and these are some of the things that we in TLCOM do. You may say over-mentored, but I think that role model is very, very important, where we need to get more women in tech that are successful and use them as role models to bring to sort of crowd in many other women in tech. I think the kind of things that we're seeing in the market, where there are funds that are deliberately focused on female entrepreneurs, and we've done that with Women in Management and Business, where you're focusing only on female entrepreneurs. I think that really helps, because it helps them to start their business and get to a point, without the sort of distractions of being, one in a world of in a male world. So really raising pools of capital that are focused on women in particular, and when they get that capital, supporting them in a manner that ensures that they succeed. Some of the things that we do within TLCOM, we have these every year. We have a female founders summit. It's growing every year. First one we had probably about 60 female founders. The last one we had about 100 female founders. And what this is really, one important thing. It's a safe space for women to network. They can network with each other. In fact, between the first and the second summit, the two female businesses actually merged to create a much bigger business, and that was because they kind of met at the Female Founders Summit. So basically, I think it's been very deliberate. It's very dedicated pools of capital. I think it's great. Being a bit more deliberate in mentoring and supporting these female founders, number two. And also, one of the things that we have as well that I think is good is having indicators for some of these, or no, not indicators, targets for some of these VC funds in terms of female founders in your portfolio. Now, you will not invest in a female founder because she's female. You invest in a female founder because she's got a great business, great vision, and she's going to build a great company. But when you have a target, it forces you to be to look a lot harder and a lot deeper to find those female founders. And I think that's one of the things that will help in actually making sure we get more female founders getting the capital that they deserve.
Interesting. I'm glad you mentioned that in terms of having a target. I wonder if other VCs who are on here can begin to think that way and look at that as they look to invest in Africa, or are doing so already. Okay. Okay, this question, I think it tailors back to the previous point you made about the 10x growth. Are we going to see this sort of exponential growth in the number of unicorn companies in Africa, vis-a-vis funding, I suppose? And as a VC, what kind of factors will drive this?
I'm not sure it'll be exponential, but I think there'll be more unicorns. Because, when I look at, the companies that we're seeing right now, I mean, these are companies that are solving really big challenges, and they're solving it not just in one country, because there's similar challenges across the African countries. They're solving it across the continent, and this really supports their diversity, and it also supports the it also supports the growth and scale and the valuation of sort of $1 billion, which equals unicorn. So I think we will see a lot more unicorns. I think it's going to take time. And like I said, there's a lot of hard work to be done. But I think that they will come from sectors that are probably the most challenged, and sectors that benefit the most from technology enablement. So we've seen fintech. We've seen 2 unicorns in fintech, to be honest. We've seen InterSwitch and we've seen Flutterwave. I think we'll see many more, because it's a huge underserved market across continents, and we're solving a really big problem around financial inclusion. I can't predict where the next unicorns are going to come from, but I think they're really going to come from areas where there are tremendously underserved consumers, tremendously underserved businesses, and where the value proposition to the consumer and to the business makes a whole lot of sense. And the founders, a lot depends on the founders as well. The founders are founders with vision. They're founders that can run with the vision, and of course, capital. We cannot build unicorns without the capital to actually fund those companies to a point where they become scalable and they can become unicorns. That is so important. I did say there's been a 10x growth in capital, but I'm talking about $2 billion for the whole of Africa, 1.3 billion people, 54 countries. It is really a drop in the ocean. So I think that having more capital to support these companies, some of them will fail. That's a VC model. But the ones that will succeed, they really have got to be the ones that will hit the ball out of the park. So a lot of capital has to be deployed to get those few companies that will be the unicorns and really begin to validate the the tech VC funding model in Africa.
And I wasn't going to ask this, but you've spoken about founders and you reference this a lot. So I'm going to ask, what does it take to be a good founder? How do you identify, good founders that you would be willing to invest in, for example, as a VC?
That's a great question. I think for us, it's, founders that have a great vision, about what they want to do, and they can articulate that vision very, very well. Founders that have tremendous execution capacity. They can build teams. They know exactly how to make a team work, how to motivate a team. They're ambitious, and so they're not scared or worried by the constraints or the challenges along the way. In a sense, they've got to be a little bit, not crazy, but they're very, very ambitious, and not willing to accept no for an answer, not willing to accept a challenge for an answer. And finally, I think they've got to be people that also listen, because when you're a founder, you are getting capital from different sources. You're using other people's networks. I think being able to listen and being able to take lessons and learnings from listening to other people, listen to other founders, listen to VCs, listen to people who've done it before. I think that's a very, very important trait for founders. A very important trait for founders. So that's what I would say. So it's a mixed bag, quite honestly. And I think we see all of this or elements of this in all the founders in our portfolio for those that have been successful.
Yeah, and then it makes sense, vision, execution, ability to build a team, like you've said, that ambition and resilience, and a little bit of crazy, and to be able to listen and just build on, the lessons learned. So thank you for that. I have a final question before we go into questions from the audience that I've come up with, and I know I think you've spoken on quite a number of, panels and webinars over the last year, and we keep hearing this thing about post-COVID, the new normal. So I'm not trying to be cliche, but again, we are we're entering, or we have now come into the new normal. So what does it take to win in Africa in a post-COVID world, or this new normal?
To be honest, Aramide, I think I don't think anything has changed at all. I think it's the same thing. It's the same thing. It's capital, it's grit, it's ambition. It really is the same thing for me.
Yeah. Thank you. And then I
love
that. I love it because we have to be realistic as well with everything happening. Business is still as business. Yes, some industries have been impacted more, but it's still the same. And things levers that one will pull to grow business. So again, thank you. Okay, so looking at questions from the audience. Let's see. I have one more around. Okay, so someone says, what continental and global shifts are we seeing, and how do these translate into opportunities for business in Africa?
Yeah, I think the biggest shift we're seeing is what I mentioned in the sort of Disturb keynote, which is really around technology. And the fact that Africa is becoming a digitally demanding continent. It's a mobile-first continent, and that's the biggest shift we're seeing. And that's where I think innovations that will really address the challenges and move us forward will come from. And the fact that, maybe a little bit to answer your question around the post-COVID world, I think what has happened with COVID is that it has accelerated our digital journey in Africa and every part of the world, to be honest, but it's accelerated it more so here. Mm-hmm. And so the need to be online is much more enhanced and important than it was before. So I think that's really, for me, that's the major shift. And the fact that we've seen that there are many challenges that we can solve by leveraging technology. I think that's really the biggest thing that shifted in the continent.
Thank you for that response. How best can businesses leverage Africa's riches to catapult the continent into a new phase of growth? You've mentioned a bit of this, but I presume we're looking now at small businesses and just entrepreneurs in general.
Mm-hmm. How best can they leverage this? I think. Look, I've spoken about Pula and Koba. I could speak about many, many more. These are, in a sense, they're still small. They're small, medium-scale businesses. And I think what they have done is actually leveraging technologies to solve a particular challenge or a problem. I think on the other side of the coin is, how do we get these small businesses that are fragmented in fragmented markets to grow and scale more? I think it's these platforms. And I didn't give that example. If I give the example of Kobo, for instance, where a small business, which is a driver that has 3 or 4 trucks, gets on the platform, the fact that he can get more rides, he can get more trips on the platform than he got before. He can get, what he didn't get before is when he drops goods in some part of the country, he can get he can reverse logistics. Basically, he can pick goods up there and bring them back to Lagos. And because of the transparency that Kobo gives in the market, they can actually see much more greater opportunities in reverse logistics. What this does is that it allows these small companies to scale, because they have more working capital. Kobo does this as well. They have more working capital. They're doing more business, and they can scale themselves out of these fairly fragmented markets. So I think that's the opportunity that it really does present. I hate to, I'm saying that everything is tech enabled. Everything is about tech, but the truth about it is that, to a large extent, it really is about embracing technology in this continent and ensuring that we don't miss the boat when it comes to, using innovation to scale, to grow, and using technology to scale and to grow as well. It's so important. And while I may sound like a broken record and saying technology is the answer, it's not. It is an answer. It comes with its own challenges, but it really is an important thing for the continent to double down on to really begin to accelerate our growth.
Thank you, and I hear that. However, we have things like healthcare gaps, and many of the challenges in those sectors may not necessarily need the kind of technology that scales business to become unicorns, for example. So, what do potential business owners or people who want to go into those sectors do when it comes to trying to raise capital to address those problems in non-tech?
It's funny you mentioned healthcare, because there's a tremendous opportunity there. For many Africans, we don't have health insurance. So, all of our health is out of pocket, and it's expensive, and it's not that accessible. And so what we're seeing in terms of innovation in health tech are companies that are making the smaller sort of pharmacies, the smaller clinics, making them much more effective and efficient. For instance, diagnosis is key. For many Africans, what kills them is a wrong diagnosis. And so innovation around handheld diagnostic devices that can actually be put in a rural healthcare center in rural Nigeria, Kenya, wherever it is, that makes a practitioner a lot more smart, in the sense that you get a right diagnostic and you can prescribe the right drugs and everything. That's innovation in the hardware itself, because they move from these huge machines that cost millions of dollars to small handheld machines that cost thousands of dollars that can be leased to these clinics. All of that is enabled by tech. So there is a healthcare gap, but again, I hope I've given an example of how we can use technology to bridge these healthcare gaps. But again, talent shortages, there are not enough doctors, nurses, whatever it is. We need to address that as well. But tech does actually help us to address some of those gaps.
Yeah, absolutely. I mean, there are gaps, but there's also, in the whole entire chain, there's still things we need to address along those lines.
Yeah.
Okay. We have a question from Tafara Muwandi. How would the issue of limited disposable income be solved? Can we build large businesses without average incomes increasing significantly? Does it not limit the kinds of businesses that can be started?
It doesn't. And in my earlier comments, and I apologize for the break, in my earlier comments, what I did say was that Africa is, yes, a very large continent, lots of people, but they are, they have very little disposable income. And so when you're innovating and using technology, what you're doing is improving affordability and improving access. And that's what technology does. It means that, for instance, I gave the example of Pula, where farmers are some of the poorest people on the African continent. They live on $1, $2 a day, whatever it is. If you can use technology to design an insurance policy for them, that means that they're only paying a couple of cents or 50 cents a month. That is the big difference, and that really addresses the affordability. So, the person that asked the question is right. We've got to have innovation that addresses affordability, because we're not, disposable income is small, and so therefore, technology actually allows that, because artificial intelligence, technology enabled models really bring down the cost to serve, and that's what's really important, and that's what we really need to innovate around.
Okay, great, thank you for that. David Agiman-Budu, can you talk about innovation in science and tech? It seems that most of the conversations do center around software. Are there any VCs who are betting on hardware or hard sciences to drive innovation?
Yes, I do. And I gave the example. There's a company in Kenya called Tambua Health. And what they're doing is they're building these handheld devices, these scanners that can help to diagnose. So they're handheld scanners that can help to diagnose early stages of a disease. They help to, they can diagnose diseases from blood. They can diagnose when you scan an organ or whatever it is. So that is science, hardcore science and tech that is actually moving from, as I said, these very big, very expensive machines to stuff that is handheld and really you can actually diagnose with fairly reasonable levels of accuracy. So that's one example of what is being done in the hardcore science and tech and innovation. That's a very good question, because it's not always only about software. It really is about some of the hardware, but that's a bit harder to do in this continent because, again, of some of the supply chain infrastructure challenges that we have. It's not that easy to manufacture in Africa, because when you're trying to have a cheap, affordable handheld device, you can do all the design and everything, but trying to manufacture it in Africa, there are all kinds of costs that are added, and so that's a much more challenging thing to do. But it is being done, and we see that being done. And I hope that's a good example for the person that asked the question.
A great example. Thank you for that. So quite capital intensive, but not impossible. And from what I hear you say. Okay. From Idris Busari, in relation to talent shortages, how can we curtail brain drain and encourage our healthcare talents to stay on the continent? Just building up from the what you were talking about before.
That's a tough one. How come? You can't stop people from leaving the continent. You can't, because it's choice. It's a choice that they make. But I think what we can do is actually, I love the graphic that's coming up. What we can do is actually make it harder for people to leave by creating those opportunities. And so when you see that you can work in a tech firm in Africa, or an innovation enabled or innovation centered firm in Africa that can be valued, that can be seen at par with other companies around the world, that can be valued at over $1 billion, where your job is actually, you're adding value, you're seeing the impact of the company. If you can create those kind of opportunities, you're paid reasonably well, you have world-class skills. I'm going on and on, but if you can create those kind of companies or those kind of opportunities for Africans, then it's easier to keep them in continent. And remember, if I can just give another example of a company that we've invested in, that's Andela. I kind of mentioned them in passing, and it really addresses the problem of trying to get people to stay in the continent. So what Andela does is that it actually takes young Africans, not a science background, as long as you're smart, it trains them over a period of years to be world-class software engineers. It deploys them to US companies in the US and Europe, but not physically deploying them. They're based in the continent, but they're working with they're embedded in engineering teams in different companies across the world. This is one way where you're doing a highly valued, highly skilled job, but you can remain in continent. And so those are the kind of examples of how we can get people to remain in continent. It's tough. I'm not going to say it's easy, because the continent is not attractive for young people, but we need to work to make it more attractive by funding these kind of companies and making them attractive for people to work in and stay in the continent.
Makes sense. Thank you. We have a question from Tafara Mwandi. How do you build a unicorn at 50 cents per customer? Great question.
How do you build a unicorn?
How do you build a unicorn at 50 cents per customer?
No. So the unicorn is the valuation. It's a valuation of the company, not the revenue or the income or the profitability of the company. The unicorn status is based on multiples of revenue or based on whatever it is. So that's it. There are unicorns. If you talk about Flutterwave, for instance, is a unicorn. They are charging, they're making a small commission on every single payment that goes through. And how they become a unicorn is that they get more people to make payments through the company. So instead of they're processing billions and billions of dollars of very small micro transactions, and that's what makes a unicorn. So it's not so much the profitability; it's really around valuations and also the impact. Flutterwave is now in 13 different countries. I can mention a few other unicorns, but again, just to let the audience know that the valuation is based on the unicorn status is based on the valuation and not the profit and loss. And the valuation is based on the impact and the potential for scale, potential for growth of these companies, and that's really what you're looking at.
Thank you. Okay, where do you feel female founders are lacking, or areas of improvement in general? For example, leadership or articulation. In your experience with founders?
I think, and it's a sad thing, because I work not only with female founders. As you know, Aramide, I was one of the founders of WIMBIZ, and I work with women in business in general. And I think the one area that women are lacking is around confidence. listened to pitches from female founders that are really, they're great female founders. They're solving a very important challenge. But the confidence in which they articulate their pitch, the confidence in which they portray themselves, that is sometimes lacking. And if you're a VC that really, or not even a VC, an investor or anybody that's really doesn't have a lot of time to try and mentor or train or whatever it is, that is really where we fail. And one of the things that I have worked on and what I work on is really helping women to be more confident in their pitches. I'll give you a short illustration. I was on a pitch competition, female founders. They came on. It was an education startup, fantastic pitch. And they were asked, do you need how much money are you asking for? And they said, oh, we don't need any money. And I said, how do you say that? You must need money for something. Even if you hadn't thought about it then. So it's that confidence. It's that being able to articulate your vision. It's really about being able to show that you can do this. And because you're in a world that is actually the female gender is not that present or prevalent, or they're not role models, it just makes it a lot harder, unfortunately. And so we have to work a lot harder. We have to be a lot more confident. We have to be a lot more articulate than if it was in a male founder in these sectors, unfortunately.
Thank you for that. And I see a lot more coaching sessions going on for women who are pitching businesses.
And I think you do this as well, don't you, Aramide?
Yes, we do. And there's been competitions as well, that will help women just better their pitches, essentially. But yeah, there's a lot going on, at least in Nigeria, and I'm sure in other African countries. So thank you for that insight. And then finally, we've talked about talent as a key challenge. Can you share your thoughts about EdTech, education management startups in Africa, and where you see opportunities for growth in the coming years?
Yeah, so EdTech, I think it's really important, because what EdTech does is that it not only improves access, it also improves the quality of the education. And so there are many EdTechs that are focused on different sectors. ULesson, for instance, is focused on primary, secondary, complementing what goes on in the classrooms. There's Eneza, which is focused on a much more broader market. So it's important, because I think what EdTechs do are they democratize access. And also they democratize access for in a very cost-effective manner. I think that's really it. So so I'm not sure I've answered the question. Maybe I didn't quite get the question right.
No, I mean you did. They said, where do you see what opportunities for growth in the coming years?
Yes. So I think it's really addressing how to improve the quality of teaching in the classroom. It's really to, again, focus on, science and technology, and using technology to make science and tech more attractive, more interesting, so that more people go into that area. It's really around, giving access to people that don't typically have access to that quality of education in a much more cost-effective manner. That's where the opportunities are. It's really those three areas. And so innovating around those three areas, I think those are where the opportunities are.
Mm. Thank you. Oh, well, we have some time for this last question. What role do you think China has to play in Africa's tech development?
Ooh. Well, I think it's a number of things. First of all, capital. So there's a lot of capital, and we've seen Chinese capital coming into the continent over the last few years. I think also, there are quite a few similarities between the Chinese market and the African markets in terms of size. I know bigger, but in terms of size, in terms of some of the challenges that we do have. China, beyond the sort of Shanghai and Beijing and all of that, they would tell you that there's similar challenges. So really working with Chinese companies, the large Chinese companies, to support tech startups in this environment, because they have similar context to what we have, the large markets, broken, fragmented, and all of that. And they've been able to build several unicorns based on these fragmented large markets, where income is growing, but income is not as high as in the developed parts of the world. So that's where I see. That's where I see it. But I think that we also need to be careful, in the sense that sometimes the Chinese capital can be quite disruptive, in the sense that there's a lot of it comes in, it can disrupt or destabilize the market, as we've seen in fintech in sort of 2019, 2020. But I think, yes, they do have a role to play, not only in tech, but in many other parts of sectors in Africa.
It's good that you mentioned, about disrupting the market, and you're right. I think I was reading up, they have about 119 unicorns at the moment, at least in Asia. And well, when you think about it, they have had significant investments in education and talent. So there's been years of that. And so it will take a while. But again, like you said, we can rely on China for capital and then support for entrepreneurs, which is encouraging. Okay. Well, I think we have a few minutes left, so I'm going to wrap up here and say thank you to Dr. Omobola Johnson. We've heard from you on technology, innovation, the role finance plays, and what you foresee the capital landscape to be over the next few years. And it's been a pleasure just listening to you and hearing from you as a venture capitalist, as someone who has been in the public sector, who's worked in technology, because you've been able to shed light on all these areas and perspectives, and to help us see that it is possible to succeed and grow businesses and scale and address challenges that we would have ordinarily thought, okay, well, this is too heavy, or this is too, it's way up there. You've really allowed us to see it very differently. So thank you for the insights. Thank you for the time. And I just want to say thank you to everyone else who's been on here, engaging, asking questions, and participating. Thank you.
Thank you very much. And I do apologize for the internet issues earlier on, but thank you very much, Aramide. And thanks, everybody.
Thank you.